I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is May 4th.
And today we're going to be talking about a couple of things. Number one, the Feds moved the rate today by 25 basis points. Mortgage rates, where are they? New home construction permits in Greater Phoenix. We're going to kind of look at the history there. And what do the current active listings look like in the Phoenix area? Also, what cities are buyers markets and what cities are sellers markets? So let's get into it.
All right, remember, this is for informational purposes only. This is not financial advice. And if you like what we're doing here, be sure to subscribe, comment, and like. If you have any loan scenarios or questions you want, because we are right here in the Phoenix area, we serve all of the state of Arizona. We'll be happy to answer your questions. You can reach out to us by email or phone or in the comments. Okay, so let's go right to the Fed rate. Jerome Powell spoke yesterday. It was high probability that he would raise the rates 0.25%. And that's what he did. He raised it 0.25%. And the next meeting is June 14th. And there's a lot of expectations for, or at least a lot of people wondering what he's going to be doing then.
Right. And I think, the market's feeling like they're going to hold, which I think that's a pretty good assumption. I will say my big takeaway from hearing Powell speak was I think people were wanting a tone that was more of we're going to start pivoting, we're going to hold and then pivot. He didn't say that. He said we're going to hold and see if we need to do any more action, which it's not a huge surprise, but I think people were hoping not to hear that word, more action.
Yes. And so also, when he spoke, he was talking about the banking crisis that we've seen in the last 3 months. There have been several banks, especially most recently, First Republic Bank, go under. Chase bought that. Now, how does this fit into the Fed and the whole the policies of raising rates or increasing rates? It's a matter of how those banks, if they fail, if there's any more banks that fail, that will push down inflation if it causes pain in the economy.
Right.
So it's a delicate dance. And right now, he said, nothing to worry about, folks. Everything's great. There's going to be, everything's sound and the system's working just fine. We will see. We don't think, really regional banks, there's probably going to be several other banks in the coming weeks to months that are going to have troubles. But really what that means is it's going to drive rates potentially down,
right,
if it causes problems. So that would be good for mortgage rates. Mortgage rates could come down. The Fed rate.
Yeah, I think that these regional banks that are having issues, it's like that neighbor kid that comes over and is banging on your windows. You just want them to go away so that they can focus at whatever they're talking about in the family room. So the Feds are trying to get this inflation thing under control, but the numbers are still actually pretty good, which is bad. We need that control. Meanwhile, you have these banks, which is the neighbor kid banging on the window. and they may not be able to ignore that. If this neighbor bangs loud enough, they may have to adjourn the meeting and say, okay, we got to take care of these banks.
Yeah.
So that is one of the things that I have really kind of woken up to, is that these banks are kind of leading the charge in what may make the Feds do something a little bit sooner than what they had hoped.
So right now we're looking at the Chicago Mercantile Exchange. This is the CME group that these are all the futures contracts, and it's helpful at predicting, or they are predicting. So it's helpful to look at this and say, okay, where is the Fed rate potentially going to go in the coming meetings? We can see right here today, or right there on May 3rd, yesterday there was an 86% chance that the Fed was going to raise it 1/4, and that's exactly what they did. For the June 14th meeting, there's an 81% chance they're going to raise it or not raise it. It's going to hold right where they're at today. And then starting in July, this is the July meeting, July 26th, there's really a chance, almost 38% chance there will be lowering the Fed rate 1/4. And then kind of every meeting thereafter, it's just looks like it's going to be continually to come down.
So if they do rise, look, they would potentially rise in that, June, July, and September period. Again, it's a very, very small chance, but still, look, there is positive numbers there. Versus when you get to the end of the year, there's zeros, for going up. So if we are going to see a rise, it would probably come sooner than later because we just can't handle very much.
Yeah, and probably the biggest reason why these are the smartest traders on Wall Street, the reason why they're probably betting that the Fed rate's going to come down is really because inflation will likely be coming down, or something's going to break. They feel like the Fed's going to have to lower the Fed rate to really prevent or prevent another problem. And so, a lot of people are talking about recession or other failures in the economy, but really, right now, this is what their predictions are, is really starting really in September, coming down. And, if you let's just look out 12 months from today, we're going to be in May 1st, 2024. They show that the Fed rate will likely be 1.5% lower. So 1.5% lower than they are today. That when we were talking about where would that put mortgage rates, it would probably put them maybe around 1 to 2% lower than where they're at today.
Yeah. Yep.
I think it's really important to look at the 10-year yield. Again, the smartest Wall Street guys are looking at this, the smartest banks globally. Every major investment firm looks at the 10-year yield. And, I think it's just important that, you're if you live here in Phoenix, you're a homeowner, you're a home seller, maybe you're a business owner, maybe you're just looking and trying to get an idea of where the market's going. The 10-year yield is what drives that 30-year fixed for the financing. So the majority of all residential financing is being affected by the 10-year yield.
Yeah, even other countries look at our 10-year. People are buying those bonds, and what drives the price of those bonds down is when people buy them. So you're actually seeing when that bond goes down, it's going down because people are actually buying it. If they weren't buying it, they'd have to be lifting up that yield in order to attract more investors. So this is not only small time investors or Wall Street. This is countries.
Yeah, and so what usually happens is when the Fed raises rates, well, the 10-year yield is going to go up. But that's actually the reverse happened today. He mentioned that the rate is going to go up a quarter, but the 10-year yield started coming down. I think, and it's just kind of right now, the Wall Street guys are betting that rates over the long term are coming down. So we see this channel building. I drew these straight lines. It doesn't mean that these are unbreakable walls, but they will likely could very well trade in a range going down from here. Mm-hmm. And we're below the middle, but really it could come down and really improve rates. But again, if inflation is really bad, that 10-year yield will continue to or actually bounce back up. Where are mortgage rates today? I mean, a lot of people are wondering where are mortgage rates. They're better than they were a week ago, 2 weeks ago, and a month ago. They're about 30-year fix. We see at 6.5%. The 15-year fix is about 5.9.
Yeah, the 30-year FHA right at about 6.8 or 6.08, and then the 30-year VA about the same, 6.09.
And this is right from the Mortgage News Daily. If you have a particular scenario for a home purchase or refinance, you can just reach out to us. We'll give you a customized quote.
Yeah, and our rates too, full disclosure, are lower than this.
Yeah.
So I want to make sure that our listeners do know that. This is from a nationwide data source.
Yeah, that's right. It's a big survey that will kind of give you an average. Okay, so the population of Phoenix, I want to give people kind of a context of where we've been. I've showed this before. In 1950, in Phoenix, there was only 221,000 people in population. Today, there's about 4.6 million. And it's forecasted to go up to 5.3 million by 2035. And I just want to make sure we kind of establish how many people are here and how that growth curve has been so vigorous from,
Yeah, and look how steady it's been.
Mm-hmm.
And again, Arizona has so many facets that are a great reason to move here. The quality of life, when you factor everything from places to live to income to jobs, weather, look at it. That's a very straight kind of line.
So now that we know I've seen the population of the greater Phoenix area, we want to show you what the new home construction permits have looked like. It's really interesting to see that back in 2020, about 20 years ago, the population was about 3 million. And
when you said 2020, 2000.
Oh, sorry. Yeah. 2000. Mm-hmm. The population was about 3 million. Today, it's 4.7 million. It's about 45%, 46% more people here today versus in 2000, the year 2000. And what you'll notice is today our permits for new construction are about 46,000. That's the annual permits that are granted by the different cities here in Phoenix. But really back 22 years ago, there were about the same number of permits. So 46% more people today, and yet the builders are building the same number of, or at least, building the same number of homes.
Yeah. Building, more people today building less than there were 20 years ago.
Yeah.
Now that 46,000, that seems high today. But
that's over the last 12 months. And again, it's just according to, and it's just, this is there's just so few that, again, there's 46% more people, but the same number of permits.
Yeah. And I think the other big takeaway is, okay, so call it 60,000 permits in like our peak. So look at that. In the building boom before the
2005 2009.
The Great Recession. That was probably a high watermark. I don't know how far back we have to go to see it above it. There may not be anything above that. Yeah. When you compare that to where we are today, we are down about a third. Okay, but look at the lowest point, which was, during the Great Recession, only 8,000 permits pulled. Down from 63. That's huge.
Yeah, and this 63,000, it's not 2009. That's meant to say 2005. That was right before the crash.
Okay, 2005.
Yeah, and in 2009, it was 8,300. So very little building going on. And so we're really building up this idea that there's so few homes out there. And there's a reason why this inventory is so low, and we're going to be getting into more inventory charts here soon.
And why is low inventory important for our listeners? Because it's affecting the price of those homes. Yeah. When you have more demand than you do supply, obviously that will push the pricing up. That's why we're talking about this.
So this is the annual sales rate. This is the number of homes that sold in a 12-month period. And if you go back to about 2003, well, that's exactly where we're at. We're selling the same amount of homes today, which is about 70,000 homes over the last year, as we were 20 years ago. And again, our population, there's about 46% more people here today, same number of homes selling. And again, here's the listings, the active listings. Why there's so many more people in the Valley here in Phoenix chasing fewer and fewer homes historically. And if we look at this year, 2023, it's that purple line right here. We're at about 11,500 homes for sale
today. So if you were to log on, you would see about 11,500 homes on the market.
And this red line is last year's inventory line. So last year, 1 year ago, it was about 6,000 homes for sale.
Which is really weird to think about because we're sitting here talking about, oh my gosh, 11,500 homes is low. Yeah. Well, a whole year ago, we were half as much as that.
Yeah. There were charts, and then I'll show you another time, but they were in 2005 and 6, it would be normal to have 30,000 homes on the market. Like a healthy market today to have a really good balance between sellers and buyers really should be probably about 30 to 40,000 homes on the market. And we are well below that. So it's really, a few homes on the market, lots of buyers, prices are going to tend to go up. And even right now, we have seen the sellers markets, 14 out of the 17 largest cities here in Phoenix are in a seller's market. You see this green area here. This is the market, the Cromford Market Index. And when it's over 100, that means basically there's more buyers chasing sellers and making it a seller's market. And only 3 of the cities, Queen Creek, Maricopa, and Buckeye, are technically in a buyer's market where there's just more sellers out there than buyers.
And the reason why we're talking about this is not only do we have, the home pricing being elevated, but in these cities, you're going to have a little more leverage or you're going to have a little less leverage depending upon which city you're in. So when you're in a city that has more buyers than they do have sellers selling homes, well, you can't be as hard as you might be.
Yeah, so if you're a seller in Chandler, things are pretty good right now. You are leading the pack as far as the number of buyers chasing your listing. Or if you're about to list your home, Chandler's the hottest city right now. They're followed by Glendale, Fountain Hills, and then Phoenix. And again, we'll continue to monitor this and keep you guys posted because it's also important. Whether you're buying a house, selling a home, maybe refinancing. So be sure to contact us if you have any questions at all. We'd be happy to help.
Yep. Give us a call, email us. We'd love to hear from you.
Take care, everybody.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.